On 17 November 2021, Netflix had a market capitalization of $307 billion. On 17 June 2022, its market cap was $77 billion. The company's share price fell 75% in 7 months and made Mark Cuban look like a crypto bro. Several explanations have been given for this dramatic drop in Netflix's share price. The more likely explanation is that the company's stock was too expensive to begin with. The market capitalization is the amount it will cost to buy all shares of a company at its current market price. In other words, the price tag on the company. The value of the business is the amount of profits the business will produce for you if you are never allowed to sell the company. Price is what you pay, value is what you get.
Well, the intrinsic value of Berkshire, like any other business, is based on the future amount of cash that can be expected to be delivered by the business between now and Judgment Day, discounted back at the proper rate.
For the year 2021, Netflix had profits of approximately $5 billion. If you were to buy the company for its $300 billion price tag, it would take 60 years for the company to produce its $300 billion in profits. As most big-time investors would be dead 60 years from now, it is highly probable that they are not willing to wait 60 years to get their money back. It is therefore likely that a level of profit growth was assumed for the foreseeable future. Let's say you want to make back your $300 billion in 20 years. To this end, profits will have to grow at 9.5% per year for 20 years. Starting at a base of $5 billion, after 1 year, assuming this 9.5% growth rate, profits will be $5.47 billion. After 2 years, $6 billion. If profits continue to grow at the same rate, in the 10th year, profits will be $12 billion, and in year 20, $30.5 billion. That is the power of compound growth at work. If we add this 20 years of profits together, we get to the $300 billion number. In the first quarter of 2022, only 3 months into our hypothetical 20-year projection, Netflix, for the first time in 10 years, reported a drop in subscribers. If we redo our calculation, assuming profits will not grow, this $300 billion quickly turns into $100 billion. If subscribers continue to decrease, Netflix might not have 20 years left, and the $300 billion becomes a hell of a lot less. The markets were quick to realize this and punished Netflix accordingly, just like Netflix punished its subscribers for content like this. The case can be made that the eventual loss in subscribers should have been foreseen. Subscribers cannot continue to grow indefinitely. Eventually you will end up with a situation where there must be more subscribers than there are people on earth to justify the stock price. It is also infinitely possible that the geniuses on Wall Street, true to form, did not think this far and simply rode the wave until it breaks, leaving their clients holding the bag. Markets are, however, also quick to reward companies when they outperform. If Netflix returns to what we used to know and love them for, where it is clear that their goal is making content that we will enjoy, the public and the financial markets will undoubtedly return the love.